If I'm already struggling with my finance, how can I possibly reduce my mortgage? Well, this is a pretty good question. And it's the challenge that we pose, right? How can we reduce our mortgage? And that's something that we can work out together. There's a couple of ideas that people often don't think of. One that really comes to mind is about effectively using your tax return to help pay your loan off. But there's no use waiting till the end of the year. When interest is calculated daily, wouldn't it be better if we had that tax money in our account every month, paying the loan off every single month? So one thing you can talk to your accountant about is perhaps a PAYG tax variation. And what your accountant could do in that scenario, if approved, is reduce your effective tax rate and give you that money back in your salary every month. Instead of waiting to the end of the year to get $10,000, you could get an additional $800 a month in your pay packet and use that to reduce your loan. The other is to look at the other expenses in your household budget. What things are there that don't necessarily need to be? I'm not talking about reducing the fun stuff that we want to enjoy our lives, like lunches or going out for dinner or any of those sorts of things. I'm talking about things like car leases or the spare motorbike that's in your shed or the excess credit card payments that you have because you just haven't got around to paying them off. They're the sorts of areas where we often find at least $300 or $400 a month in someone's budget, really simply and quickly, and most people are happy that we've found that for them. The last one that is something that's a little bit boring but definitely works is just looking at your loan structure. Majority of people have their loans set up the wrong way. They have a budget and a loan payment that comes out of their budget every month, whereas what we like to do is have all of your money go into your loan if possible and then redraw out a spending budget that works for you instead. Just that structural loan will save you quite a lot of money.